Housing markets around the world have been on a crazy climb, and surprisingly, in the United States and Canada, COVID-19 has actually accelerated that climb. This is greatly thanks to the government keeping interest rates at all-time lows to prevent the countries from entering into a recession. Today, I wanted to do a bit of a thought experiment here in the land of the cold. Canada. Seems like every other news article is saying how new graduates and millennials are being priced out of hot housing markets such as Toronto and Vancouver. So I wanted to know, is it actually as difficult as they're saying it is, or can you still buy a house? And today I'm going to go through a little bit of a thought experiment showing you how a lad such as myself, soon to be engineering graduate, might be able to purchase a house in one of the hottest housing markets in the world, Toronto. So in this thought experiment, we have to start somewhere, and I'm going to start with the location. Enter North York, Toronto. This is a wonderful region of Toronto located just north of the concrete jungle. It's close enough that it's still part of the big city and most major transit lines go there, but it's also far enough away from the downtown core that the housing prices are slightly more reasonable. The reason that I've chosen this location is because if I wanted to live in the big city of Toronto, I would want to live in North York. I grew up in an average detached suburban home just outside of Toronto, and that's actually where I'm recording the video from right now. I've also lived with a group of people in student housing, apartment style, and I'll be honest, I think I like my privacy. So that's why for this experiment, I'll be looking at detached single-family homes where you can rent out a certain part of the home. I know going into this that I'll have to rent out part of the house if I want to qualify for a mortgage. This also gives me the added benefit of if I ever want to move houses, I can always just leave the house and rent out the part that I used to live in to somebody else. Now next, and what you're probably all wondering about, is pricing. So how much does the average detached home in North York cost? Well, at the time of recording this video, it's January 2021, and according to the Toronto Real Estate Board, the average selling price of a detached house in North York as of December 2020 was $1.12 million. Now, I don't know about you, but that seems like quite a lot of money for a house. And the crazy thing is that these housing prices have only been going up at an average of 5 to 10% per year for the last 10 years. So by the time that I'm ready to buy a house, I can assume that it'll probably cost me a lot more than this. And now comes the fun part of the experiment, figuring out how long it would take me to get what I'm gonna call a dream home in North York. So for the sake of argument, let's say you're fresh out of university. I know that the average student in Canada graduates with about $25,000 of student loan debt, but for the purposes of this experiment, I'm gonna completely disregard those student loans and pretend they don't exist. Next, I'm gonna assume that our imaginary person is an engineering graduate because that's what I can relate to. So what other important things do we need to know? Well, we need to know how much income we're going to have. Assuming that you're able to go the classic route and get a job right out of university, let's assume that you're able to convince someone to pay you $65,000 as a starting salary. As I'm sure you've heard, if you switch companies, your salary can usually increase more than you would get in an average pay raise. So we're going to assume that you only switch jobs twice, and when you're not switching jobs, you get a 5% pay raise. When you are switching jobs, you get a 10% pay raise. So if you switch companies in years 3 and 6, this is what the next 10 years of your potential income can look like. So now that we have a rough estimate of your income earning potential, we can gauge how long it's going to take you to save up for a down payment on this wonderful home. In Canada, the general rule of thumb is that your housing expenses, which includes your mortgage, property tax, and heating expenses, cannot exceed 32% of your gross annual income. Additionally, your total debt cannot be more than 40% of your gross annual income when you are looking to get a mortgage. This means that if you have things like car payments, student loans, and other payments to be making, and if you add the new housing expenses on top of that and it's more than 40%, you won't be able to qualify for that size of a mortgage or that size of a house, and you will likely only qualify for something that's lower. So as you can see, student loans could actually have an effect here in determining whether or not you'll be able to qualify for the largest mortgage possible. So now that we know that you can only spend 32% of your income on housing, what other things can the government do to try and help you out? Well, I'm not going to go super in depth here, and if you want to hear a bit more, check out this podcast episode. For now, I'm just going to give a quick overview of 2 incentives. First off, we have the first-time homebuyers incentive, which is essentially where the government will give you 5% of the value of the home as a loan, or 10% of the value of a new construction home, and they will own that 5 or 10% of the house until you pay them off or sell the house in the future. So if the price of your future house goes up, you and the government both win together, and if it goes down, you and the government both lose together. Think of it as selling part of your house to the government so that you can qualify for a bigger mortgage. The second thing that you should be aware of is the homebuyer's plan. And man, do they ever need to come up with better names for this stuff, because it gets so confusing. The homebuyer's incentive allows you to withdraw $35,000 as an individual or $70,000 as a couple from a registered retirement savings plan account. You can only withdraw this money for the purposes of buying or building a home, and you have to repay it back within 15 years. Man, that was a lot. Thank you for sticking with me so far. So just to keep things simple here, I'm not going to be using any of these plans in my example, but do know that they are out there and they're available if you need them. So with that out of the way, how much cold hard cash do you need to be able to buy this $1.12 million home in North York? Well, another caveat in Canada is that if you want to buy a home that's over $1 million in value, you have to put down a minimum of 20%, no questions asked. So to buy this house in North York, you would need a minimum of $224,000 as a down payment. So if you take the difference of those values, throw it into a mortgage calculator, you'll see that your monthly payments are about $3,780. And if you want to see what this is annually, multiply it by 12 and you get $45,480. Next, we need to know what the property taxes are. So I found a similar house online in North York, and I found the property taxes are $4,340 per year. And as per the government's requests, we have to make sure that we include heating expenses. So assuming that your heating expenses will cost you about $150 per month, because we live in the land of the cold, that comes out to $1,800 per year. So if you add all of those numbers together, your total housing expenses for the year will be $51,900. Now, if you recall from a few moments ago, this number has to be less than 32% of your gross income. So if you take this number, $52,000, and divide it by 32%, your total comes out to about $162,000. This means that you have to show at least $162,000 worth of income to be able to qualify for a mortgage on this house. I don't know if you remember, but nowhere in the next 10 years of your potential income would you be making $162,000. So now what? Well, there's a few things you can do. The first and most obvious is if you have a partner and they're also making money, they can help you qualify for a mortgage. The second thing you can do is save up money for a bigger down payment on the house, which will reduce your monthly mortgage expenses. And your third option would be to rent out your house to somebody else, and this is commonly referred to as a mortgage helper. If the house that you want to buy has a separate suite that you can rent out, what you can do is look at the average rental prices in the area, take that amount of annual income and add it to your income, and then this would be the income that you state to the bank. So for example, let's say that the house has a 1-bedroom basement apartment that you can rent out. So from my research, I found that the going rate for a 500 square foot basement apartment in North York is $1,200 a month, which works out to $14,400 per year. So in this case, you would be able to add $14,400 to your income and potentially qualify for a bigger mortgage. And last but not least, another thing that you can do is try and find a third source of income, whether that's from a part-time job or running your own business or something else to increase your income. Now, I'm sure listening to all of this, it seems a bit tough, right? So what's your best bet? Well, I would say a combination of things. Shoot for a 25 to 30% down payment, increase your income with a side hustle, rent out part of your house, or get married. Nice. Of course, there are a few things that I kind of glossed over, and you want to know how long it would take you to save up. The average savings rate in Canada is 7.74%, but since you're watching this video, I'm assuming that you really want to get a house and you're willing to save a little bit more than that, so let's do a bit more experimentation. So what if you save 20% of your annual income? Will that be enough? Well, according to my algorithm, no, not at all. As you can see from this Excel spreadsheet I made, you will need to save about 26% of your gross income, and after paying taxes to the government, it's looking more like you'll need to save 30 to 34% of your after-tax income in order to be able to qualify for this house. One job really isn't enough nowadays, is it? So, in conclusion, is it still possible to buy a house in Toronto? The answer is complicated, but in short, yes, it's possible. But it'll take a lot of planning, a lot of side hustling, and a really big desire to own a house in Toronto. And with work from home being such a big thing now, it might be valuable to reconsider why moving to Toronto would be a good idea in the first place. Thanks to this pandemic, Toronto's offerings have significantly decreased, and yes, they will return when it's over, but it's still going to be expensive and you don't need to live there to work there anymore. So with all that being said, it's important to consider why you're living in a certain part of a city, whether or not you'd be willing to make the compromises to move somewhere else, whether it's the suburbs or a different, less expensive part of the city, and maybe you'll see that you'll be able to qualify for a mortgage a lot easier. But if you're still set on this, how long will it take you? Well, if you have a spouse or common law partner, it'll take you about 5 or 6 years, and if you want to do it yourself and you really work hard, you can do it in about 10 years. But I also didn't include the fact that housing prices will continue to increase while you're saving money, so it's gonna look like you should save maybe 5 to 10% more than I told you to save previously. If you found any part of this video useful, be sure to leave me a like and subscribe down below. I'm going to be leaving an Excel spreadsheet available for download in the description, so if you want to mess around with the numbers a little bit and see if you can qualify for a less expensive house, then by all means check it out. And if you're interested in seeing more detailed videos on the government incentives, such as the first-time homebuyers plan or the homebuyers incentive, be sure to leave me a comment letting me know that you want to see it, and I will proceed to make a video for it. Thanks again for watching, and remember to always put your best foot forward.